Welcome back. I'm here today with Sherri Stoneberger. Sherri is a real estate consultant with Legacy Realty. Sherri, welcome to today's show.
Thank you.
Sherri, give us your background, how you got where you are today, how many years you've been in real estate.
My goodness. I've been in real estate 26 years. I started in real estate after I finished up working on a master's degree at Cal State and decided that I needed a job with flexibility so I could manage having kids and do all the things I needed to do. What I didn't realize that real estate's a 24/7 job, but managing it has been something that I've been able to do and do well with combining family and all the other things that I do with it as well. I've been in the Tri-City areas, Fremont, Union City, Pleasanton, Livermore, San Ramon area, working that area for just a long, long time, all the years of my career. And I've really enjoyed just watching the transformation. I've been up and down cycles several times now. The upswing of a cycle in 2000 and the downturn 2008, and then now we're back up on a roll again. So it's been fun watching all the transitions, and I know exactly what to expect when it comes along again.
You know, you've been being in the real estate market for 26 years and also maintaining the position of one of the top realtors in the area is a remarkable feat. Nevertheless, what do you say your secret is to continuing to maintain the business, keep it going in both a good and a bad market?
I think that basically it's a balance of knowing what your clients want and how to take care of them. And I usually end up 50% sales and 50% listings every year. At the end of the year, it's 50-50. So which means I'm still in a buyer, representing buyers as well as sellers. And so my business has always been balanced. And, if you have too many listings and they're not selling, then you're in trouble. But you got to have the buyers and the sellers as well. So it's a good match between both the buyers and the sellers. And that's worked for me all these years. I'm not one particular agent that will go into a neighborhood and just list homes. I go out there, still show property, and make it work that way with taking care of the clients.
How does a person know when a good time to buy is? They may be looking at the real estate trends and say, "Well, it just ran up. Have I missed my chance?" How do you advise clients on that area?
I think that they have to look at their own particular family situation. What is their motivation to buy, to get into a house, or to move up in a house? I mean, have they expanded their family? What is it that their own personal needs are at that time, and whether affordability factor is there or not. So they have to look at what their own situation is. I think that basically, if you focus on the family and their needs, and the finances come, and everything falls into place with making a good decision with what they need to do. A good time to buy would be what's right for the family at that time.
And with that said, of course, you're making your money on the commissions and selling the real estate, but do you ever advise some clients to rent versus buy?
Yes, absolutely. And that sometimes is when they come in new into the area and they don't know exactly where they're going to be or if they're even going to like it. And sometimes instead of jumping right into it, then I just say, why don't you rent in a good school district area before you decide to buy? And a lot of times, if their finances are just short of what they're being able to afford or what they want, I mean, they see the carrot dangling out there. They want to buy a house, but it's just not coming into place with the type of financing. Then I recommend that they rent for a while and save money, and then they can get more of what they want.
And what are the pros and cons of buying? I mean,
of buying a home.
Mm-hmm.
Well, I think that again, you have to. I kind of focus on what's right for the family. What's best for their situation. And if their situation says, okay, I understand the 5-year picture, the 10-year picture, the 20-year picture of our lives at this time, and then you try to get them to see, if you buy now, is it going to be a start home, and then you can buy up, or should I just rent and save more money at the time, and then buy in a better district, school district, or better neighborhood.
I'm visiting today with Sherri Stoneberger. She's a real estate consultant with Legacy Realty, been in the market for 26 years, focuses on helping investors and also residential real estate sales. Sherri, we need to take a quick break. We'll be right back after these messages. And I want to get into talking about foreclosures and short sale homes and when it is the right time to jump into that market.
With current laws, we have left our children an enormous financial burden. Even though they may be too young to understand it. At GROCO, we care about you and the ones you love, and the quality of your and their lives. Call us today to see how we can help. 877-CPA-2006.
GROCO, helping you along the way.
Welcome back. I'm here today with Sherri Stoneberger. Sherri is a real estate consultant with Legacy Realty, been in the market for 26 years. She helps investors in real estate and also people either buying or selling residential homes, dabbles in the commercial market somewhat. But Sherri, in today's market, with the, I guess, uncertainty, a lot of people may have overextended themselves, get into situations where they need to move out of their home. Sometimes the homes get foreclosed on. Sometimes they may be looking at a short sale. So when a prospective buyer comes to you and says, "Hey, Sherri, I want that deal. I want the foreclosure that I could get it for pennies on the dollar, or short sale to buy, when the mortgage is underwater." How do you advise a client in that situation? When is it a right time for them?
I think there's still opportunity for short sales and foreclosures, and particularly short sales, because short sales you end up getting a better buy on them if they were just out on the market, and usually it's an opportunity for a buyer to get in and start the process with just a little bit less money than they would have to pay just if it were not a short sale. So short sales also have turned out to be a way that people have over-invested, or they had a first and took out money, a second loan, and they can't refinance. So they're stuck, with higher interest rates. And if they qualify, if they can show that their income has reduced by 20%, then the banks will probably allow them to do a short sale. And the good news is that it's a quick turnaround now for short sales. It's not like it was 2 years ago where, it took sometimes up to 2 years to get a short sale finished. From start to finish now, it's averaging about 3 to 4 months. So in a lot of times less than that, because now some of the bigger banks have already pre-approved short sales where the client goes in and says, "I'm in trouble," and they'll already approve it before it even goes out on the market.
So with the buyer coming to you, is there a certain formula or a certain approach you would take to a short sale, knowing if it's really at the right price?
Of course. I mean, we do all the investigations, market analysis, what they owe on it versus what the bank will take. And it's pretty, the bank usually sends out 3 different appraisers to do what they call a broker price opinion. So it could be a real estate agent that they've hired to go out and do a market analysis, but they usually have at least 3 of them, and they average that out to come out with the price that the bank says the house should be worth. So, and that's not sometimes they leave a little bit accountability for the condition of the property as well, because a lot of them are deferred maintenance. If they can't afford to make the payments on the house, they certainly can't afford to keep it up. So a lot of times you see a lot of deferred maintenance on the property. So once the bank comes back with the 3 broker price opinions, and they can set the price, and if the buyer has offered and gotten their offer accepted on a short sale, and the bank still has to approve whether that value is up to what they're willing to accept. And they have a formula for that. I mean, each bank is different, but usually it's a formula whether their losses versus this, what they can write off versus what they're willing to sell it for.
And the buyers, when they come in, they can still put all their contingency that they need to get the Section 1 items on termite reports and all that corrected? Or is it
Usually
as
not.
is?
It's usually as is. However, they still have a right for all their investigations. And basically, I don't sell houses without at least all those inspections completed, because you wouldn't want your buyer to get into that same situation that somebody else had, not being able to afford the property or keep it up. So there's just a lot of investors who want the short sales also because they're easy flips. They're in bad condition, and they come in and clean them up and enough to flip them.
Okay. Sherri, I'm running up against the break, and I'd like to hold you over for another segment. I'm visiting today with Sherri Stoneberger. She's a real estate consultant with Legacy Real Estate. We'll be right back after these messages.
He's the world's most trustworthy man. Tax filing deadlines are scheduled around his vacation calendar. The IRS agent who audited his client apologized.
I don't always advise people on their taxes, but when I do, I save them every penny legally possible.
GROCO CPAs and Advisors.
Come to GROCO and stay wealthy, my friend.
Welcome back. I'm visiting here today with Sherri Stoneberger. She's a real estate consultant with Legacy Real Estate, been in the market for 26 years. And we were talking about short sales. Sherri, let's review the advantages of a short sale.
Right. The advantages usually is the buyer gets a better price on the property than he would if it were all fixed up and out on the market.
And this is where the bank is actually taking a loss. They're not getting repaid or, for all the money that they lent
Correct.
out.
And it allows the seller to sell his house without having a foreclosure. And foreclosures, usually you can't buy for another 7 years. But short sales, the sellers can get back into the market after showing they have stability in their economic conditions and their jobs right now. If they can show that they have 20% stability from the time that they had to do a short sale to when they want to reapply for a mortgage, it's as short as 1 year now.
Wow.
FHA guidelines.
So this is a great thing. People that in the past they were afraid to do a short sale because they couldn't get back in. They'd be stuck with renting. And so now the FHA says, hey, if you have the down payment and you can make the 20% deposit for a conforming loan, we'll let you in again.
Right. They definitely are starting to ease the guidelines. They just want to make sure that the new credit that you've established is perfect and that you've shown 20% of your economic conditions have improved since the short sale.
So when it talks about new credit, they're actually ignoring the fact that you did move out a short sale. And let's say that they went through, you had a bunch of credit card debt, you got it all cleaned up. They're going to let you do a fresh start then without waiting for the 7 years.
Yes.
Good news.
It is good news.
And this just came out
This week.
This week. Wow. That's and where does a person find out more information on these new FHA guidelines?
You can go to the FHA guidelines and government loans on the web.
Mm-hmm. Okay. So, Sherri, I want to move back to the prospective buyers looking for a property. How do you know, or how do they know if they can actually afford it? Is it really a situation where they should just depend on the bank to say, we think you can make all these payments, or is there a process that you walk your clients through?
There's actually a process. The first thing you do, you'd want them to meet up with a lender, a reputable lender of their choice. I can give references, but it's ultimately up to them to choose their lender. And in that process, they ask them questions about, what they have, what they can afford, what their plans are, and banks don't want to see any more than 36% of your gross income go to your mortgage. So your housing. So which means that if you have two incomes, you can probably most likely get into Bay Area housing, although we have one of the most expensive areas in the United States to buy a home. But still at the same time, you have to look at all your tax advantages, their affordability factor, whether they're a young family starting their family, and if one's going to be off work for 2 or 3 years, they have to take all those into consideration on what's better for them at this time in their lives. So I usually meet with them before I would even take them out and just go through the numbers and see what their affordability factor is, what their plans are. Is this going to be just a short-term house, or what they're planning to do? Or is it going to be one that they're going to stay in for 10 to 15 years?
Is there a rule of thumb for a client who comes out and says, I just want to flip the house?
Well, basically, if they just want to flip the house, we have to look for something that's the ugliest house on the street and has the most work to do on the street. And my investors have been very lucky in the sense that the 3 areas are usually a probate. Probate houses are good flippers. And usually they're just, maybe the elderly who have taken care of the house all along, but it's not updated. That's always a good one to flip, those kinds of homes. And then the short sales and the foreclosures. Those are.
So how does housing affect the inflation affect the housing market?
My goodness. Well, the inflation, because it'll affect the interest rates. The bond market all affects the interest rates. The interest rates have been so historically low that buyers have been able to go in and refinance and afford homes. So it's stimulated the housing market a great deal. And once the interest rates went up, then you could certainly see a little downturn in the market. I mean, not a downturn, but kind of it's stabled out this summer a little bit.
And where would you say, give me a recap where we're at now with the real estate market, the first half of the year. How's it been? Is it a buyer's market, seller's market, and where are we at now?
Well, I can say that it's been a seller's market up until this point, and I think now it's getting to be more balanced again with buyers and sellers because it's kind of flattened out a bit. And it could be just the timing of the year. It always seems to slow down around August because people are busy with their last-minute vacations and getting school ready and things like this, and also the last quarter of the year. But I think now that, the big push is gone, a lot of the investors have gone, so I think we're going to go back to a stable market. So it's not so much a buyer's market or a seller's market, but just a nice, stable market where people can enter in and the good houses that are ready to go sell pretty easy.
So what's the sweet spot in the market? I mean, within the range, is there kind of like a cap at the high-end houses at this level seem to move really well, and above this level they seem to be a little bit slower? Or
it's interesting because anything under $400,000 was selling like 20 offers on each thing, but I noticed that a lot of those are coming back on the market. So the investors have cooled off a little bit.
Okay.
So,
hey, Sherri, we're running up. I apologize. We're running up against the break here. Quickly, give us your contact information. A prospective buyer or seller wants to contact you. How do they do it?
Sherri Stoneberger, Legacy Real Estate and Associates, and they can find me on the web. They can Google me and find me in many places. So, or they can simply call me 510-504-7177.
Sherri, thank you for joining today's show. Sherri Stoneberger, Legacy Real Estate.